Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. Good morning, good morning. Great to see everybody. Happy Tuesday, right? Yeah, happy Tuesday. Time to get after it. So we got we had an unusual session yesterday, not because it was any kind of weird volatility. I mean, it's moving up in a volatile market. So let's talk about volatility for a moment. Let's take a look at the Nasdaq here. We might take a look at that candle and say, oh my gosh, it's such a crazy candle. But always remember, look at the individual candles from the perspective of what preceded it. What we're seeing right now just can't be considered unusual considering the volatility that we've seen ever since the 22nd of February, right? So keep in mind, what am I trying to say? Don't be surprised if we see these large ranging candles, maybe getting to or exceeding the typical price movement range. And you might say, well, Rog, what the heck is that? Is that average true range or something like that? No, it's actually something more akin to what banks have used to determine their value at risk. In other words, a historical volatility, which is distinctly different than, say, average true range. So take a look. The typical price movement range for the Nasdaq, day in and day out, when you have a look back of 6 months, can range anywhere on the average of about, give or take, just below or above 250 points for the session, upwards to almost 400. So when you keep that in mind, there's two things you can do. Number one, you've got a measuring stick for what the market does with a high probability do. And then you've also got an understanding of what's lower and higher volatility. So that measuring stick is really important. And I use this very large look back historical volatility measuring stick. Now, again, it doesn't have to supplant if you're using average true range, it doesn't have to supplant that. But remember, your typical average true range look back is what, 7, 14, maybe 21 periods. That means 7 days, 14 days, maybe 21 days at most. What I'm talking about is 6 months. So it's a very different look. Also remember that when you're not looking at historical volatility and you're, say, leading up into a major event, we've got Jerome Powell on Thursday, right? So again, I don't want to be short, definitely tomorrow, but I don't want to be short when we've got a barrage of Fed members speaking this week. We've got Powell on Thursday. But the market might contract in front of Powell. Now, if you've got a very short look back study measuring volatility, remember that it's being skewed by the fact that the market's going into wait and see mode as opposed to 6 months of information. So I thought I'd kick that off because that's where we are right now, that higher than normal volatility. Great to see everybody. Thank you very much. Yep, I see the thumbs up. Thanks, gang. Thanks for smashing that like button. Very cool. All right, so Line Watcher, how are you, my friend? How do we identify that a new uptrend is developing as opposed to chop? Well, we never know what's going to happen, meaning going into the future. I'm not going to project. That's for all the geniuses on television. But clearly always know where the markets are going. So with that being said, remember this, two things. One, chop doesn't mean we can't trade that environment. It just means we need to shift from the type of strategy that we were using. I mean, the Nasdaq's a perfect example. Look at all the trending double green we saw since, as you can see here, December 1. We lost that on February 22. We went into chop. Does that mean I can't buy the Nas? Remember that the directional bias that I will trade the Nasdaq with, this is the daily time frame, is bullish. And that just means that I'm going to not change direction. I'm actually going to just change a strategy in the zone from which I will buy. In other words, it transitions from pullback buys to oversold buys. And that's just reflecting the trend that was and the current chop. So if we reorganize into an uptrend, I'll just wait for the market to go double green again. Right? If we're green over yellow for a little while, that means the 8, 13, 21 have started to organize. But when that 34 kicks in, that's the trending cue, not the 8, 13, 21. When that 34 joins the party, now you've got a higher probability trend in place. So thanks so much for that. Vish asks, is where we are right now a good entry point for silver? All right, so let's go take a look at the SI futures. I'll always start with the futures when I'm looking at commodities that have a ETF alternative. So taking a look at silver, what I have here, I think I have to sneeze. All right, excuse me. Whew. All right, so if I have this is SI on the daily time frame. Yeah, is this SI on the daily time frame? That's ruble. Let's try this again. SI, silver futures. There we go. Okay, let's try that again. There's silver. Thought that looked weird. Although I like trading the ruble too. That's a whole other conversation. So taking a look at SI, do I like this zone on silver? I don't love it because I don't have a lot of volume helping me out. But what I do have is this oversold level. You know, what I would say here is use a slow stochastic for an oversold level. Ready, aim, fire for those of you that have that premium tool from Simpler. I don't have a problem with it. You know what you might want to do is shorten the time frame and wait for an intraday reversal. So why SI? Well, I mean, now when you jump over to SLV, so yeah, I don't have a problem with that. I would say look for an intraday reversal formation, maybe on a 15-minute time frame, and you really want to see we break out through 25 to the upside. That could be an interesting setup. So tricky because we don't really have an edge here. I'm bullish, yes, but the less trending quality we have in a market, the more difficult it is to say, hey, this is the higher probability level. So we're looking at some thresholds for a breakout that I would say would put you looking somewhere north of 25.05. All right, thanks, Fish, for the question. Hey there, James. I started listening to Checklist Manifesto. Excellent book for traders to read. Absolutely. Atul Gawande, Checklist Manifesto, very thin book. I don't think I have it on that bookshelf. It's probably on that one there, but yes, highly recommend it. Currently at the end of chapter 3, do I think you could create a list of books for us to check out? Oh gosh, James, you know, I'm a fairly voracious reader. Yeah, maybe sometime we'll do that when I have some time. I appreciate the request. All right, moving on to expected price movement range. Is that still available from AutoChartist? Yes. So you guys know I use this AutoChartist a lot. AutoChartist is a company that I used to work with. I've done a lot of work with them, and I'm a huge fan of what they do in terms of the price movement range. There's nothing else out there like it. And yes, I'm using it right now, Bob. So yeah, I've implemented the expected price movement range mostly into my day trading. But yes, it's still available through AutoChartist. You bet. All right, next up. So the 34 joining us, the key, good to know. Michael, yes. Oh, absolutely. So there's a reason. Oh, let me go back here. There's a reason that we actually have. See, a lot of traders might look at just the 8, 13, 21, 34 together. What we've done, and I'm going to show you guys the trade flags on TOS. What I've done is I've separated it, right? What I've always done is separated it because we have our propulsion dots. 8, 13, 21 propulsion dots, even 55. But there's something, that's why I have the 34 EMA wave. There's something magical about when the 34 joins the party. Yes, I believe that there is a significant increase in the probability of the trend continuing once you have the 34 aligned with the proper bullish structure of 8, 13, 21. Absolutely. Thank you for that. All right, Piton. Sure. Econ is supposed to do a 10-to-1 reverse split, okay? Would I want to get in before the split? I mean, it's it's not a bad idea in terms of psychology. A lot of people love to do that. You'll notice that Apple benefited from that last year. Tesla benefited from that last year. And I would have no doubt that if this is indeed an oversold level, Piton might as well. So please don't. So Apollo, thank you for the question. Please don't let that be the setup, right? Let that be a catalyst for the bullish sentiment and interest. So let that be the catalyst. Let that be sort of the environment. And then I'd say find a setup. Maybe it's a breakout through a high. Maybe it's an oversold level that you're interested in. Maybe it's a intraday reversal. Maybe it's an intraday trend pullback. I mean, intraday reversal on the 60-minute might be pretty interesting to reveal that A, we're getting through some different layers of volume, and we're getting above the wave, which would get us double green within a short period of time, most likely. So yes, but just don't let that be the setup. Have that be the catalyst for bullishness, and then find a setup would be my advice. All right, thank you for the question. Patricia asks, good morning. What do I think about the SPY? Oh, cool. Okay, so just like Patricia, just like we started on the ES we started on SI for silver. I'll start on ES for SPY. And I like the long position, generally speaking, because, well, I think the path of least resistance is still up. We still have this massive stimulus package that look, I'd say based on the sort of expectations that we had seen before the election, even in January, there was probably an expectation of 800 billion, maybe 900 billion in terms of the package. It looks like that 1.9, give or take a billion, give or take 100 billion, right? It looks like that 1.9 is likely to pass. I don't believe the market is factored in or refactored in the size of this stimulus package, nor has the market fully discounted that there's probably going to be more. So the reflation trade is on. I think the reflation trade does help equities, but I think the reflation trade is far better in commodities. But it's a trade that I think is going to continue to propel the market higher, with particular emphasis for now on small cap and the Dow, but it's hard to bet against the S&P. So you come back to the SPY, to your point, and I am bullish. But we haven't, so this is not, I'm newly bullish because the market rallied yesterday. We're bullish, period. We're bullish in many ways. You might say, well, Rog, how can I know to stay bullish? I would keep a very close eye on the 55, Patricia. I would keep a really close eye on that in terms of bouncing off that level. Okay, so thanks for the question. All right, next up is, how do I see TLT? 30-year bond, TLT ETF. So we'd start with the ZB. And how do I see it? I see it probably still continue to trickle a little bit lower. It's what it's been doing for a really long time. As I said, it's not the fact that bonds are in a downtrend that's particularly troubling to the equity markets. It's the fact that we crossed certain thresholds in yield by getting down as low as we have. And then the velocity that we've seen probably through, mid-February to now. Velocity and the threshold in terms of yield that we finally crossed through. But I would suspect that the parade of Fed members that we have on the calendar this week alone suggests that they're going to try to unring that bell a little bit and calm folks down by trying to communicate that they may be willing to buy across the yield curve, which would manipulate that spread. So that's they've done that before. If you've got a widening gap between the 3-month and 10-year, or whatever two you're watching, if you're the Fed, how do you narrow the gap? You buy across the yield curve. You don't just simply focus on the long end of the yield curve, the long bond. You buy across the yield curve. It manipulates and narrows the spreads. So I would just want to see, not that we suddenly turn into an uptrend here, but that we slow down. So what do I consider? What would I see? Probably lower lows, but not quite as violent as we've seen over the past week. But I'm not thinking we're going to see a V bottom, but maybe this market goes into more of a chop. So there's nothing for me to do in bonds here. If it bounces, it might be a reasonable short. I don't think suddenly we just start skyrocketing on bonds and moving higher at all. So probably a slowdown of the downtrend is what I'd say we're going to see. All right. Thanks so much for the question. JD asks, good morning. Good morning, Jay. Gold, can we get off these 6-month lows? So I had a technical bounce setup that I had mentioned in the free video. No doubt, do I think we could head lower? Yeah, and we did. But I was just looking for a quick technical bounce, and that's all we got. That's all I was looking for. Whenever we go down and test a previous low, typically there will be pending orders waiting there, and we'll see what I call a technical bounce. I don't call that only. It's a technical bounce. It could be oversold. It's a previous low in terms of price. And so it was a Darvis level as well. So we got a technical bounce. And, you know, this has been an ongoing conversation, not only here in Charts and Coffee, but, you know, when I look at longer term, when I look at even shorter term views of gold, you've got to look at real yields. Gold moves in accordance to real yields, and it's an inverse relationship. One zigs, the other zags. And so as long as real yields continue to move higher, gold is going to have a very difficult time bouncing. So I would almost say, don't worry about gold, watch real yields, and they continue to move higher. And that's going to be problematic for gold. All right. Thank you for the question. All right. Next up. Hey there, Trisha. Oh, okay. You started on the Atul Gawande's Checklist Manifesto. Love that book. It's a 2 or 3 hour read. It's an amazingly it's a short book with a lot of great information, cool stories. I think the process that is discussed is one that every trader should have. So very, very cool. All right, let's see what we have here. Next up is POTN. Or PTON. Oh, I don't know anything about POTN. That's what, 1 cent stock? Pot Network Holdings. Why don't they just call themselves Pot Bitcoin Crypto Blockchain Holdings? I don't know anything about this 1 cent stock, but yeah, we were talking about Peloton before. Sure. All right. Joyce, my pleasure. It's a great way for me to warm up for the morning. I really appreciate it. I love the group that we've got going here every morning. Let's see what else we have here. Ernest Hemingway asks, how are ARK ETFs priced? If Kathy Wood is dip buying to add to the funds, I'm sure it's not as simple as that, but I hear what you're saying. Does that mean there's cash position priced into ETFs? Well, many ETFs, Ernest Hemingway, have cash positions. One of the things that Kathy Wood wanted to have when she developed ARK, and that was back in 2014, I believe. One of the things that she wanted was to have this open ecosystem, which I think makes them unique. So yes, many of them do have cash positions built in. Is she always fully invested? I mean, highly unlikely. So if I take a look at, say, ARK, okay, all right, the ARK Innovation ETF, probably the one that most folks watch, and I look at the holdings. I don't know how far down the list of holdings I'd have to go to find whatever their cash holdings are, but I'm sure they have. I'm certain that they would. So if I were to, you can see in the first, however many this is, top 15. And then if I take a look at the CSV, I'd have to log in to get it, which I can, but I won't right now. But if you want to, yeah, would I be surprised if there's a cash? Sure. I mean, you'll see it in the holdings. You'll see it in the holdings. So I'm not quite certain what the question is, but I agree, Ernest, that she does tend to find things on sale, hence what she did with Tesla, this is their largest holding. She's committed to that position. It's the largest one across, I believe, 3 out of 5 of the ETFs. So does that mean that her ETF will be more volatile. I think her ETF is volatile according to the positions that she holds, the largest one being Tesla, and that's going to certainly create the volatility. I don't know the cash position, and maybe I'm misunderstanding the question, so my apologies. But I think her holdings, the actual stock holdings, are what are going to create the volatility in the underlying ETF. So thanks for the question. Colleen asks, which course and where are my beginning courses to my style? Hey there, Colleen. I think the best place to start to get the best bang for your buck, quite frankly, Colleen, would be one of two places. Check out Countdown Trader. That's at countdowntrader.com. You can also, if you want to take a course, it depends on whether you want to be a day trader or follow my longer term, kind of the conversations we have here. I would check out simplertrading.com/sector. That might be a good place to start. That's the ETF masterclass that I did recently. But I'll tell you, every one of the services that we have, and a lot of people don't know this, so it's a great place to sort of wrap up. Every one of the services that we have has a learning center built into it. And my partner here in the office curates some of the best videos. We record new videos to help folks get started with the indicators and the way that I trade. And then, for example, the sector secrets, which we're meeting today, every week for 30 minutes, we do a technical analysis primer, how to get started with the charts, getting them looking more like mine. And then we do a Q&A. So there's a lot of education built into the services, the ongoing subscriptions, or you can take one of the classes. And the one that I think it might be at simplertrading.com/ETF. I'll have to check the links on that. My apologies for not having that handy, but you can check those out. All right. Okay, gang. And just like that, I have run over, but I will see you all tomorrow. Same time, same station. Be good to each other, gang. I'll see you later.